It starts with an alarm so sharp and so unsettling that even veteran aerospace investors paused, checked the tape twice, and wondered whether something fundamental had just shifted under their feet. And right here, for those watching this as shorts, you can tap the full version link below to hear the uninterrupted story with every detail included. Also, because a fully updated trading strategy reflecting the latest market conditions is included later in this episode, stay with me through the opening chapters. It will be worth it. On 11/18/2025, something happened that does not happen in the defense and aviation security world under normal circumstances. A major European security agency placed an order worth about $8 million for a fully autonomous counter drone deployment that would protect one of the continent's largest airports around the clock. Normally, procurement in this domain is slow, drawn out across multi-year tenders, extensive technology trials, and bureaucratic oversight. The suddenness of this order implied urgency. Something new had emerged in the threat landscape, something existing systems were not built to handle. And the company at the center of this unexpected acceleration was ONDS Holdings. Only hours later, news broke that ONDS had completed the acquisition of Sentrycs, a cyber-based counter-drone company with real-world deployments in more than 25 countries. Most firms spend years trying to secure even one breakthrough position in autonomous defense. ONDS had been assembling a whole ecosystem: airborne autonomy, ground robotics, cyber interception, electro-optical sensing, and mission-critical wireless connectivity. The market suddenly recognized that this company was no longer a quiet industrial wireless supplier. It was becoming a multi-domain autonomous defense platform. To understand how the company arrived here, we need to go back to 12/22/2014 when ONDS was founded. At that time, it was a specialized industrial communications company. Its FullMax software-defined radio supported long-range, interference-resistant networks for railroads and utility systems. When ONDS listed on NASDAQ in 2018, investors saw it as a steady but modest growth play, very far from the world of autonomous defense. The story began to bend in 2021 with the acquisition of American Robotics. This wasn't a typical drone business. It was the maker of the first FAA-approved fully autonomous drone in a box system. Normally, drones require human pilots, remote supervision, and manual flight intervention. American Robotics eliminated all of that. The drone launched itself, flew its mission, returned, recharged, and processed data without a person on site. This was the first major transformation point. Shortly after, ONDS acquired Aerobotics, the Israeli company behind the Optimus autonomous urban infrastructure system. This expanded ONDS into applications where security, speed, and automation were non-negotiable. Aerobotics also brought Iron Drone, an autonomous interceptor capable of detecting, pursuing, and neutralizing hostile drones without human direction. That is noteworthy because traditional counter-drone systems require radar operators and manual responses. Iron Drone replaced that entire workflow with autonomy. From 2023 to 2025, the expansion gained even more momentum. ONDS formed ONDS Autonomous Systems, then added Apero Motion, which specializes in ground robotics and secure fiber-based operational systems. It integrated Insight intelligent sensors to strengthen AI-based recognition, then added 4M Defense to extend into smart demining and underground robotics. Normally, merging even two robotics platforms poses major integration challenges. ONDS merged 5. The market became simultaneously intrigued, confused, and skeptical. Then came the capital formation. In 2025, ONDS secured about $45 million. In 2025, it raised another $150 million. On 10/06 and 10/07, it raised roughly $425 million in equity and warrants priced above market. Equity raises usually need a discount to attract participation, but ONDS priced higher and still completed the raise. This was a major clue about institutional confidence. By then, ONDS held around $840 million in cash. A small-cap company now stood with the liquidity of a major defense contractor but still retained startup-level innovation speed. The decisive moment arrived when ONDS announced its 3Q 2025 results. The company generated roughly $10 million in revenue, a six-fold increase from the prior year, and about 60% sequential growth. Gross margin rose to about 26%. Guidance increased from $25 million to at least $36 million. And ONDS projected more than $100 million in revenue for 2026. For the first time, the company's acquisitions were clearly synergistic rather than scattered. Everything clicked into place. The stock reacted swiftly. Shares that once traded near 0.50 climbed toward 8 and pushed closer to the 12 range that marked the year's high. Technically, the stock traded above its 20-day, 50-day, 100-day, and 200-day moving averages. RSI moved into the upper 60s, showing strong bullish momentum. The MACD confirmed upward continuation. The ADX hovered above 30, indicating a powerful trend. Oscillators also showed near-term overheating, implying likely support zones near 6 and 7. This technical behavior was consistent with a stock undergoing revaluation rather than a short-lived spike. The broader environment explains why this revaluation makes sense. Airports, borders, and critical infrastructure are facing an unprecedented proliferation of low-cost autonomous threats. Traditional defensive systems rely on human analysis cycles that are simply too slow for the speed and scale of modern drone incursions. ONDS positioned itself at the convergence of technologies built exactly for this world: autonomous aerial surveillance, autonomous interception, robotic ground maneuvering, cyber-based neutralization, long-range sensing, and resilient wireless communication. The market is now valuing the company based on this ecosystem rather than its historical identity. At this point, the narrative has reached an inflection zone. ONDS holds significant cash and integrated technology stack and is operating within a geopolitical climate that demands precisely what it builds. In the short term, the price may stabilize or pull back into the 6 to 7 support region as the market absorbs recent gains. In the medium term, any decisive break above 9 can open a path toward consolidation between 10 and 12. And in the long term, if ONDS delivers on its projected $110 million in revenue for 2026 and continues securing deployments across airports and defense sectors, it may enter a durable higher valuation tier in the low teens. Investors are now watching not whether ONDS can scale its autonomous defense ecosystem, but how fast and how widely it can deploy it. And before we close, for those who watch consistently, comment, subscribe, like, and share these episodes across platforms, thank you. Your support drives this channel, and I will continue bringing deeper and more complete coverage for you. This was ValueStir.